So we've got a conversation teed up with a guy named Ben who found us on Instagram, saw some of our content, and seems like he's, from what he's telling me, he's doing a lot of things that are along the lines of the kind of philosophy that we profess. So we're going to have a conversation, see if we can answer some questions. All right. How are you?
You got it. I'm doing good. You?
Good, good. I was excited. We really enjoy connecting with folks on these platforms the way when they work the way you hope they do, is you put stuff out there, and then somebody that you're sort of have a kinship with before you even knew each other, you catch a spark there, and now we're thrilled to know that we're adding some value into your plan. You gave me some great detail on your backgrounds and how you were in Denver and out of Denver. You mind just going through that so people who watch this on video can get a feel for it?
Yeah, sure. So, I grew up in the Midwest. I moved out to Denver, Colorado, about 4 to 5 years ago, and I was here for about 2 years. And then I've been working full time in the manufacturing and power tool industry, and I was up for a promotion at that time, and I got to take a job out to Hawaii. So I was out there for 3 years. And decided to move on back to Denver. And before that, it was right around when the boom started kicking off for the Denver area. And at that time, I really wanted to get into real estate, but it just, in my mind, it was too expensive. And it just turns out that one property that I looked at for, say, $210,000 turned out to be $600,000, 3 years later. And one of my main goals on moving back to Denver is really deep dive into the real estate industry and try to get some investment properties underneath my belt. And so since I've been back about a year and 8 months or so. I closed on my first property up in the mountains, and I'm about to finish it as a vacation rental and turn it into that. So trying to get that.
That's awesome. So it's funny, you're talking about how you were looking at houses at 250, 275, and then you blinked and you came back and they were in the fours. This chart right here is something that, is a jumping off point for us for any analysis that we do. One of the things that we're blessed with is that we get asked by big Wall Street funds and individual entrepreneurs like you alike on, where is the next place that's going to pop, right? And part of the reason is that the methodology that we've been using for years picked some real big winners back about 10 years ago. And Denver was one of them that now looking back looks pretty obvious to a lot of people. But if you look at this chart on the screen here, the blue line is the whole U.S. and the green line is the county of Jefferson. Okay. And the black line is the state of Colorado. And so you can see back in 2010, it wasn't as obvious as to what was going to happen in Denver, right? That chart shows the median sale price per year in that county. It just gives you a nice indication of over a long period of time, which includes good times and bad times, high rates and low rates, Democrats and Republicans, wartime, peacetime, and the housing crisis, and the bubble that started the housing crisis. All of that is on this chart. And so it gives you it's kind of like a stress test, we like to say, that it gives you a really good indicator. 2010, all that had really happened was that Denver had resisted the bust. That was evident back in 2010. Like other markets were starting to take a nosedive, and Denver was like hanging on for dear life. This is around when I started talking about Denver. Actually, you saw a clip that was on Fox Business Network.
It's Denver, Colorado. Denver,
not a surprise.
Colorado.
There's not much wrong. Not much.
Not much wrong. That's a great way to put it, actually.
If you live in Denver,
and nobody seems to. The fundamentals there are incredible, and that's what we focus on first, right? Are people moving there? Why are they moving there? We see migration going into Denver from all over the country. Okay, so they're pulling out of the Northeast, they're pulling out of the Southeast, pulling out of California.
Yeah. When we first started communicating, and it took off. And so your description of you looked at houses that were in the mid twos back then, and then before you knew it, they're in the fours, and that's what the median price has done during that period of time, right?
Yep.
And so it's great because it shows you what a winner looks like, right?
shows you how real estate can be easy at the right time, but hey.
Right. But what's funny about it is the things that went into the analysis of Denver and Nashville and Pittsburgh and Charleston and Jacksonville and a whole bunch of cities that we analyzed back then
Mm-hmm.
It was all based on fundamentals. See, people I think overcomplicate real estate investing. They get crazy over deals, and so they watch too many shows on Bravo, and their whole sort of mindset is, how do I find some poor slob who's going to sell me their house for substantially less than it's worth so I can get rich quick, right? That's the noise around the space.
Mm-hmm.
But the wealth around this product is about accumulation. It's about, increasing your footprint over an adult lifetime of U.S. real estate that's smart, well purchased, but like buying what the market bears. I always pay market value. I've never gotten a deal on a property because to me the deal was Denver in 2012.
Yeah.
The nicest house in Denver in 2012, that was a deal by my definition, because of what was going to happen, right? And so what's also cool about this, if I go back over to, this is a map that just shows the whole Denver area. We've got a million properties for sale on this platform now, which is really cool because it analyzes all the properties. The system is slow because I'm challenging it with live streaming and everything else right now. Website's a lot quicker. Have you played with the site yet?
Yeah, I've gone in and out of it. I think at one point it was kind of loading up. It took a little while to load up, but I think I got it going today and stuff. And I started playing around quite in depth this morning and stuff. So
yeah, it's got the MLS on it, so it's the same inventory you can find anywhere else. And so what's interesting about Denver is that if you think about, like, if I just zoom in for a second, you see a glimpse before the pins all start showing up. These cities always have a ring around them, right?
okay.
And any city usually has a highway ring around it or around most of it. And so the closer you go to the center of it, usually it's more expensive. That's where the downtown is. That's where the earliest luxury neighborhoods are. And then the suburbs spread out, right?
Yep.
But suburbs develop at a different pace from each other. So as you look around Denver, you'll see Boulder, which I think is where you are, right?
I'm actually right in Denver currently. So
okay. So usually what happens is that you find different pockets in different directions that, for reasons that have nothing to do with anything except for the order in which things happen. Like some mayor and some developer got excited and started building luxury houses and a whole bunch of retail and a bunch of restaurants and a mall northwest or southeast or whatever of the city, and that became the suburb back in the 1950s that caught on first. Then some other direction caught on in the 70s. The same thing is true about metro markets, is that when an entire place like Denver, which really only developed over 100 years, I mean, 100 years ago it was like a trading post, or a little more than that.
Yeah, it's changed over, I think, like the past 20 years quite a bit from where I'm currently located right now to where it became pretty gentrified over the past, 20 to 15 to 20 years and stuff, and now it's a whole new landscape, but it's a great one.
Yeah, it is. And the choice of putting my reputation on the line and picking Denver back 10 years ago, and the confidence in it had to do with, okay, so it's got the jobs coming in. Okay. It's got population coming in. Why is the population coming in? This is the part that I think most people that start to get excited about what we're doing realize that it is intuitive and it is common sense and it is about watching people, like people watching, like, why are they going to Denver? And I spent time there, and I started asking a lot of people that, and I was getting answers like fresh air. Like, that's a hell of a, like, when you get the answer that fresh air is the reason why I moved somewhere and the reason why I'll never leave, that's better than I got a job at Amazon or whatever. I'm in the cannabis business. Like, the idea that something so core, and it was fitness, and it was outdoors, and it was the lifestyle and the vibe and the youth in the overall city. And so now what you're looking for is what is happening in places outside of Denver, that the circumstances of those places is identical to the circumstances of Denver 20 years ago.
Yeah,
right?
yeah, pretty
Where
much.
is it going? And so what have you found? You threw a couple of things out to me in the DMs. Tell me about this place northeast of the city.
Yeah, so it's located in Commerce City. I've been doing the driving for dollars and everything, and I drive a lot for work. I oversee like 6 different states and stuff, and so I get a pretty good layout of the land. And so this just happened to pop up on the MLS. I do believe the address is the Magnolia Drive.
I didn't see it on the site, so that may have not made it to our site yet. But what I do see, when I get into Commerce City, which is the stuff northeast of what is it, I-270?
Yep.
Between the highway and the Arsenal, is you've got these houses in the 2s and the 3s, which
Correct.
is like getting to be unheard of in Denver, right?
Correct. Yeah, and that's what really kind of struck my eye is that it was below it was below 300. I think it was 289, and it was a duplex. I've been really looking at multifamily and trying to grow that platform and that portfolio, and it has some value add opportunities to it, and possibly turning it into a triplex and everything. And so that's when I reached out to you and kind of wanted to get your insight to see what you actually thought about the listing. I mean, I may or may not go for it, but just to get some other eyes on it and a little bit of the different market area of what might be that metro area that might be on the rise to where I could get it at the right time.
Yeah, well, I liked the fact that it was as you look around the ring from a price perspective, it was among the lowest prices that you were going to get that close to the city.
Mm-hmm.
Right, so just at a glance, I can see 6s and 7s and 8s in and around Stapleton and Park Hill and up around. Then all of a sudden it jumps across the way, Westminster. It's more expensive in the other places. So at a glance, I'm looking at $100,000 swing from the prices that are jumping out at me in other places around. So it sounds like you've picked up on something. What do you think is going on in Commerce City that caused it to be kind of the delayed reaction or the late bloomer of the market? What happened then and what's changing now?
It's really a lot of the areas. I mean, there's a lot of the light rails that are going in here. And so I've been hearing about different strategies of, finding real estate around the light rail stations, but then there's also new developments coming in. There's going to be a new kind of Commerce City Union Station development that's going to be coming in as well. But then there's also a lot of new development and new construction, new shops and stuff going around in that area. And just for being around and driving around that area, it seems like it could be an up and coming.
What did it used to be? Like, what do you think was holding it back? Was the fact that it was like the Rocky Mountain Arsenal National, what is that, a national forest or something up there?
To be honest, I haven't really dove too deep into there. I think it's just kind of like public or national land, pretty much. It's nothing like foresty or anything like that, but
Okay.
it's just in Denver, everything is developing and everything is expanding out. So where you can go out to Aurora, where it might be getting gentrified a little bit, and a newer kind of area coming up to be a little bit more competitive. I think this might be, but I'm not 100% sure. But
Well, listen, if you see a couple of things, when you see retail going in, all right, well, first of all, you said the magic words, light rail. Okay, when transit lines are being laid down, it's because somebody thinks in the year 2030 it's going to be too crowded up there, and they need to make sure they lay the infrastructure down. So that's huge. Like, that's better than seeing Home Depot and Lowe's opening across the street from each other, which that's good, right? Starbucks coming in is good. Gentrified little main streets is good. But light rail those are long-term, government-oriented projects that the kind of research that has to be done before that stuff gets approved and the spending is approved is enormous. And it's all based upon, let's not create a situation where when that place gets crowded with population, we're going to approve all these housing developments. We're going to have to build all these schools. We're going to have to really develop out this section, the northeast section of the city. Let's get the rail in there. That's what I'm buying right now. I'm buying all around a rail station in a town called Belmont, North Carolina. So for the same reason, the western trajectory of Charlotte is developing slower than all the others, right? And this little town's a quaint little town, and the houses are $200,000, and the light rail got approved. 15 minutes downtown Charlotte to the Bank of America headquarters, like game, set, match. There's no doubt in my mind those things will go up 10% a year for 5 years straight based upon that train station opening up. Because I'm buying walkable to the train station or bikeable at worst, right?
Yeah.
So I like it. Like, the kind of thing that I would want to do now, if I was really going to look at taking a position in that, it sounds like you found a gem. right? It describes as one of those places that is a late bloomer. It's got the rail, so the ship is sailing. It's definitely going to get strong. The prices are still low. So now show up for a planning board meeting. Show up for an architectural review board meeting. Go check with the municipality website. See when they have their meetings, when the person who wants to build 200 houses or a multifamily complex and he has to get approvals for it, or when they're doing the final approvals on the rail, be in the room, right? There's 30 people in the room. You can see the gavel fall. You now saw something happen live. You can get a feel for whether or not the people who run the community are on board or not, right?
Gotcha.
And they could screw it up. If they're not on board, if you see a split crew, if you see people who are like, what's happening to our town is ruinous, and we want to go back to the way it used to be, and it's going to get too crowded, and you start to get a sense that those people are getting traction, that would cause me pause.
Sure.
If it's one person yapping away with that kind of point of view, but everybody else is like, no, you're going to love it. It's going to be great. Again, it's research that you can do that only 30 other people are in the room doing it. Maybe a couple of thousand read the article. Maybe a couple of hundred read the article. But you're actually there watching it. You can have a conversation with the people who are driving it, figure out when they say, like, no, we have all the votes. Like, we only need 5 votes. We've got 7. This is all getting approved.
Sure.
Now you pile on. So that's the kind of thing where you're looking for a reason to run. And if you don't get a reason to run, you've got enough reasons to want to run towards it. That's a great practice.
Gotcha. Okay.
Now the duplex I love. I'm a big fan of single family because the value of single family is bolstered by the home ownership market.
Yep.
So investors could decide it's not a good time to buy, but home buyers are still going to buy. And so single family, but the flip side is that single family is harder to make a good return on. Okay,
Sure.
you get higher per square foot rents on a multifamily.
Yep.
Are you thinking about moving into one of them, or are you all set with your primary?
So I'm kind of house hacking my renovation right now for my vacation rental. And so I'm going to be refinancing that over into my LLC after the renovation, and then I'm going to start renting that out. But this one, I'm really up in the air. I have no problem going in and moving in, and either doing like an FHA or something like that, and get it at a lower money down that way. But I think if it was around this area, I would like to get in and then renovate it and then rent it back out. So kind of do like the Burr strategy to it.
That's great. Yeah, I mean, with multifamily is the idea of moving into one of the units.
Yep.
Renovating while you're there. You because you moved in, you can get a home ownership loan as long as you live there for a period of time. It's totally legit. So you get a 3.5% or 4% long-term rate on your mortgage. Move in, you got somebody else paying the mortgage next door.
Yep.
That kind of thing is maybe the greatest opportunity in the world for somebody to use something that is a fact of life. Housing expense is a fact of life. You got to have a roof over your head. It's going to cost you money. If you can thread that through an investment program where the money's going out of your hands through the program and then out into a mortgage, and somebody else is now piling on, you wind up moving out of there. You hang on to your 4% mortgage rate, rent the other half out. Now you're seeing a 7% yield just on income coming in. And you look at these markets, dude, and the value of properties. Like if I look here, I already had it up here. This is that's Jefferson County, and here's Adams County, where I guess is where
this one's Adams County.
Yep. That's had a pretty good run.
Yep.
It's had a really good run also, but the median price is just lower, right? So it's gone from median prices in the low 2s, and then it's made its way up to the mid 3s. The rest of Denver went to the mid 4s. Yep. So it almost feels like it's already on the exact same trajectory, just a few years behind. I mean, here's the chart for Jefferson County. It just went from the mid 2s to the 4s. This is going from right around 2 even to so far the 3s. So it's going to go to the 4s. Feels like it to me.
Yeah.
Right. Like this is tough to argue with.
And I would love to invest in the surrounding Denver areas and stuff like that. But like you said, the housing market, it's up there. So going
going further out, these things spread out. I grew up in New York. Okay.
Sure.
So New York, long time ago, the first suburbs got developed. Really, the boroughs got developed. So Queens and Brooklyn and the Bronx and Staten Island around New York City. Then the first counties of the suburbs got developed. Then the second counties of the suburbs got developed. And what happened then is a lot of the jobs left the city because the price per square foot of office space got out of control. So you had a whole, we called it a two-step, because the jobs were here and the commuters were there. Then companies started to say, I'm going to go out to the suburbs where I can pay half the rent and all my employees can still drive to work. So all of a sudden you had companies moving out to the outer ring. Then the suburbs that were another 45-minute drive to there lit up and they got developed. So it's like, it's commutability. So that's why I see rail. Rail is going to extend the commutability. So you might look at where those rail stations are and say, okay, now who's willing to drive 25 minutes to a rail station? What can I get out there? And maybe you're talking about prices. Let me take a look. You could be talking about some pretty cheap real estate once you get even further up.
And like the area or.
Yeah, I'm challenging my computer too hard today with all these things going on, but I'm pretty certain if I went northeast of Commerce City, I'd see prices diving into the ones, into the twos and high ones. If I got out here, at some point it's going to get far enough away. But again, if there's a commuter rail, if somebody would drive a half hour to work, now they'll drive 25 minutes to a train and take a 20-minute train to work. That two-step thing happens with transit also.
Gotcha. Okay. So anywhere, light rail goes, that's a pretty decent area or an indicator.
Yeah. What are they doing? Do they have like a plan? Are they spidering it out into all different directions?
Yeah, pretty much. I mean, the light rail goes from DIA to Denver now, or the airport to Denver. That finished a couple years ago. There's a lot more going into the suburbs or towards the mountains and northwest of the city as well. But you also get them kind of all over, just like you mentioned. They're spidering them out, and there's a lot of new development and residential development in the area, just so people can get downtown and to where all the tech jobs or where they need to be. So
it's such a winner. The city is such a winner because all the things that made the last run happen, which was companies coming in, people coming in, not wanting to leave, getting into fresh air. Now the cannabis industry is a monster, and your state has welcomed it. And now it's setting up shop. It's putting down roots, and there's a lot of entrepreneurial activity around that. So I love it, and I think I'm very interested in seeing what you find as you go further out around the light rail stations. And I'm going to introduce you to the people on our team. We have a branch office there in Denver that can help you do some of that research, and we do property management and investment sales. So that's why we have this website and all this data, because we're trying to build relationships with guys like you that are looking to build how old are you?
I'm 32. Yep.
So do you think in terms of 25 years?
Yeah, I mean, my idea would be, so I started with one just so I could learn the ropes and everything. And I did majority of the work myself and stuff. But then, I really wanted to get into multifamily and then, kind of build a portfolio to there. Whether if it's, doing a little flip here or there, but mainly buy and hold and try my hand at that. Ultimately, I would like to try down the road, maybe like a new development or something, just because that's something that I've always dreamed of. But, baby steps first, got to pay the bills, established, and go from there.
So your head's in the right place. I'm very glad that we crossed paths. So keep me posted. Let me know if we could do this again. If anything you find supports or refutes my theories on this. But this was fun. I appreciate your time.
Awesome. Hey, thank you again, and thanks for responding and whatnot, and giving me the opportunity to come on here and speaking with you.
It's my pleasure. Thanks.
Yeah, take it easy.
Take care, Ben.
So that was a live Q&A with Ben from Instagram in Colorado, and we had a good time. If you've got questions about real estate investing, you want to bulletproof your plan, you want to run it up against somebody who's done it thousands of times for clients all over the country and for himself, contact me at grand@renterswarehouse.com. Follow us, GS Rands on Instagram, GS Rand on Facebook. DM me and let's line something up.